Have you seen what's happening with TNMG? This stock just went on an absolutely wild ride. The big question is, was this just a flash in the pan, or is it the start of something much bigger? We're about to dig into the technical signals to figure out what just happened, and what the data says might be right around the corner.
So let's just start with this number right here, 974.82%. What is that? Well, that was the one-day increase in the number of shares traded. And let me tell you, that kind of thing just does not happen every day. It's like a giant signal flare telling us that a massive amount of attention just flooded into this one single stock.
And to put that percentage into real terms, look at these numbers. The trading volume literally exploded. We're talking from a pretty quiet 1.6 million shares one day to an unbelievable 456 million the next. That's not just a little bump, that is a full-blown market frenzy.
Which, of course, brings us to the million-dollar questions. What on earth lit the fuse here? And maybe more importantly for anyone watching, is this a sustainable rally, or is this a bubble just waiting to pop? The data has clues, so let's start unpacking them.
And right here, this really gets to the heart of the conflict. The analysis found some really powerful signals that the stock could keep on climbing, but it also found some serious warnings that the party could be over at any minute. It's the classic Wall Street story, a battle between the bulls and the bears.
Okay, so let's start with the optimists, with the bull case. We're going to break down all the reasons, all the data points that suggest this stock might actually have more room to run.
You know, this surge wasn't just random market chaos. It was actually fueled by some very real, very positive news from the company. The report points to a new strategic partnership with Coupang. That's a huge catalyst. Then, on top of that, the company paid off a big chunk of debt, which investors love to see. And they announced plans for a future licensing deal. This is exactly the kind of stuff that gets the market excited.
And here is that volume explosion in a chart. I mean, look at that. This doesn't just show interest, it shows intense, concentrated buying pressure. When you see a spike like this, it means a massive wave of traders are all betting that the price is going to keep heading north. And the technicals? Well, they're backing this up. You've got a whole bunch of trend indicators all pointing in the same direction. One is saying the trend is strong, another shows that the buyers are just completely dominating the sellers right now. A third one is even hinting that this could be the start of a whole new uptrend. The bottom line is, the underlying metrics are all screaming short-term strength.
But of course, for every bull, there's a bear lurking. So now let's flip the coin and look at the other side of the story, the data that's flashing some pretty serious warning signs and suggesting this whole rally might be running on fumes.
Now, before we get to the numbers, we have to talk about this key concept, overbought. The best way to think about it is like a sprinter who just ran the 100-meter dash in record time. They are completely out of breath. They can't possibly keep that pace up, right? It's the same thing when a stock shoots up this fast. It might need to take a breather, or might just collapse from exhaustion.
And the data? It's showing that TNMG is definitely out of breath. We have multiple key indicators deep in extreme territory. One is at 98.86, and for context, anything over 80 is considered a red flag. Another is literally maxed out at 100, and a third is at a wild 360. Look, these aren't just little warnings. These are blaring sirens that a price correction could be coming, and fast.
And here is where the bear case gets really, really interesting. Even while the price and the volume were going crazy, another more subtle indicator was actually flashing negative. What this suggests is that while everybody was frantically buying on the surface, some big players might have been quietly selling into that strength. It's a classic setup for a potential trap for anyone jumping in late.
Okay, so we've got a powerful bull case and a really compelling bear case. Where does that leave us? Well, now we look at the specific price levels that traders are watching like hawks. These are the battlegrounds where this whole thing is going to be won or lost.
Think of these three numbers as the key lines drawn on the battlefield. Resistance, up at about 53 cents. That's the ceiling. The bulls need to smash through that to prove they're still in control. Then you have support, down around 33 cents. That's the floor the bears want to see broken to confirm the rally is over. And right in the middle, at about 46 cents, is the pivot point, kind of like a neutral zone. The stock's next big move will be defined by how it acts around these levels.
So the analysis really boils everything down to these three potential paths. The bullish path is where the buying frenzy just keeps going, and it breaks right through that 53-cent ceiling. The neutral path is where the excitement kind of fizzles out, volume drops, and the stock just chops sideways around that pivot point. And then there's the bearish scenario. Those overbought warnings finally kick in, the price breaks that support floor, and the sellers take complete control.
So what we're looking at here is a stock at a perfect crossroads. The evidence for a continued rally is really strong, but the warnings of a sharp drop are just as powerful. It's a perfect snapshot of market psychology, that constant battle between greed and fear, excitement and exhaustion. The only question left is, which one's going to win? The answer is going to be written by what happens at those key price levels.